options projection tool is designed to allow the trader to project profits and losses of option trades based on changes in price and volatility. The option projection tool is unique in the fact that option traders typically have to rely on risk graphs which show static price and time values on specific dates. The option projection tool allows the trader to model actual market conditions as prices and volatility change. This, of course, is critical as the maximum profits on an option trade may not always coincide with the highest price or lowest price on the underlying due to changes in both volatility and Greek value. The projection tool is divided into 4 areas. The first is the spread selection area. Here the trader can choose from one of 37 pre-built spread templates arranged by market sentiment or create a custom spread by selecting Edit Spread. The first projection pane is the projected values pane. This pane shows a history of the value of the spread on the left and the projected profits or losses on the right. The projected profit and losses will change based on changes made to the projected underlying and projected volatility. In addition, you can also select a Greek value by choosing a Greek value from the drop-down menu. In this example, I'll choose delta, and we can see as the option gets closer to expiration, the delta increases. The second pane is the projected underlying. On the left shaded area is a daily chart of IBM, which provides a history of the stock's price movement. The right side of the pane is the projection line that extends to the date of option's expiration, in this case, September 20th. Surrounding the projection line is a probability envelope based on a 1 standard deviation move in price. This envelope helps keep your price projections to a realistic level. This area based on volatility means that prices have a 68% chance of being in this envelope until expiration. As you can see, if IBM stays at the current price until expiration, the trade will result in a loss. To project a new price, simply move your cursor over a date and drag the dot to the projected price. Here, I'll project a price move to 195 on options expiration day. Once you release the mouse button, the profit and loss pane above will display the profit and loss of the position at that price. You can add additional price points by moving your crosshair to a new date and dragging the bar to the additional price. I'll now project a move to 185 on September 1st. In the case of the second projection, you'll see that the trade now has a loss but will eventually turn profitable towards expiration. In addition, a break-even line can be added by right-clicking and choosing Show Break-Even. This line projects to the expiration date and illustrates what prices need to be maintained to keep the trade break-even. The third pane allows you to model changes in implied volatility. To help the trader correctly model a volatility pattern, a historical volatility is displayed on the left. In this example, I'll arrange the volatility to closely match the history. You can see, as each volatility is adjusted, the profit and loss changes on the first column. You can select to model volatility by historical or other options by right-clicking in the volatility pane. In the case of a multi-option trade such as an iron condor, you can select leg IVs and model each individual leg of the trade. Now you see all 4 legs of the condor displayed separately. To adjust all the legs, simply move the volatility line to the desired level. You can also edit each leg separately by choosing Edit Leg Separately. Now we can select each individual leg and adjust the volatility. The color of the leg is represented by each leg in the spread selection area.